Right. Prepaid rent at a balance of 5,000 as at 1st July 25. That means when they start the period, this because they were preparing semi-annually, and the 12 months rent was paid 1st November 25 in advance. Then how much is the rent expense? So shall we go to the prepaid rent? Yes, prepaid rent is how much? 23,000, right? So when they start the period, they had how much in the prepaid rent? 5,000, and then they paid 18,000 on 1st of November. That means how much is the rent expense, guys, for this period? 3,000? Sure? No.
Wait, you were asking for this period or the whole thing?
The whole thing.
The whole question.
Yeah. So you know our reporting period is 8,000. No, I'm asking the entire thing. I'm asking the rent expense for this period. 8,000. Any other answers? 8,000. Sorry?
Not sure.
Not sure. So others, Kishore, Leah. Right. Okay. Yeah. 8,000 is correct. Why? Because from 23,000, guys. Yep. When you take away 5,000, why 5,000? Because that is how much they had when they start the period. Then when you take away 5,000, you can calculate what? 18,000, which is the prepaid rent for the 12 years, 12 months, the entire 12 months. Why? Because 12 months rent was paid 1st November. That means, so this one they have last updated on 30th June. By that they had 5,000, right? Then when you take away 5,000, then you have 18,000, which is the 12 months rent. Then if you want, you can divide it by 12. Yeah, you have to divide by 12 anyways. 1,500, right? 1,500, then how many months you have to go from 1st November? 2. So 1st November to 31st December, 2. So 3,000 plus this 5,000 will be converted to a rent expense during the period by when it comes to 1st November. So then total is 8,000. This 5,000 is actually, guys, for 4 months rent. Why? From 1st July to 1st November, 4 months. So that means if you divide it by 4, yeah, 1,250 is per month, which is the rent expense before. Then that means they have increased the rent. Yes. Right. Make sense? Right. So what's the double entry, guys? For the 8,000?
Expense 8,000
Hmm.
and then credit prepaid rent 8,000.
Very good. So we'll write there. Narrations are not required, I think. You don't have to worry about the narrations. Yep. So December 31st, rent expense 8,000, and prepaid rent expense. You have to use the same term that is used in the question as well. Prepaid rent expense 8,000. Okay. Now what do we do? Yeah, you can go and change the amount here. So prepaid rent, I'm going to take 8,000. right? Which is how much? 15,000, right? And then if you want, you can write it. Otherwise, you don't have to really worry. 15,000, and then which is the next one is rent expense. We don't have a ledger account rent expense. We have to open up, and then both of them we are going to update in where? Post adjusted trial balance. Okay, right, let's do it. Go to the post adjusted, guys. Firstly, prepaid rent. Expense 15,000. And make sure in the debit side, next one is rent expense, 8,000. If you want, you can at the same time, you can go and report in the income statement and balance sheet, but let's do it later. Okay. When we finish the post adjusted, we'll do everything together. Okay. Right. Next one. 90% of unearned sales revenue has now been earned. Okay. How much is unearned sales, guys? 5,000. What do we do with the 5,000? Yep.
90% of 5,000, so that's
4,500.
so your unearned sales will be debited 4,500
Mm-hmm.
and sales revenue is credited 4,500.
Mm-hmm. Sales revenue is created 4,500. Okay. Anything else? Any other entries? Yep. What about the cost of sales?
Wait,
Yeah.
yeah, I don't, wait, is it?
Yep. So cost of sales, how much? 100% markup, yes.
It's like 2,250.
2,250. Yep. Yep. So basically, now see what they are saying. All sales revenue received from online sales, and a part of it's recorded as unearned revenue at the time it is received. That means we are receiving all the money. We don't have to worry about the money. We have received the money, right? So bank debit and unearned sales credit, and then we are going to do the 4,500 has now been earned, right? Okay. Again, December 31st. Unfortunately, we had to repeat the date, guys, for every transaction, right? So then we are going to debit unearned sales.
Do we not need narration for each one?
No, don't about narration. Unearned sales revenue is 4,500, and sales 4,500 Then we need to deal with the inventory and cost of sales. Cost of sales is how much? 250. And then inventory. To 250. What about the GST? GST? Yeah, you don't have to worry about GST. Why? Because naturally they are receiving all the revenues. They are receiving the sales revenue from online sales, and part of it is reported as unearned revenue. Probably GST should have been received and recorded duly. So then you don't have to worry about the GST here. Right? Because they don't talk about the GST, we don't have to worry about GST. We just transfer 90% of the unearned sales to the sales, and then we do the cost of sales. Because why? They should have delivered the product to the customer. So then inventory decreases, cost of sales increases. Right? Then guys, yeah.
How'd you get the number 2250?
Yes, markup.
Oh, wait, yeah.
Yeah, it was at the top. Okay, guys, then what do? We are going to update the sales. Sales will be how much? Plus 4,500. Okay. And then unearned sales minus 4,500. Inventory minus 2,250. And the other one is cost of sales plus 2,250. The things that we have done, let's tick them. Right. This is done.
So in the exam, are you gonna like mark the question book like this?
Yep. Exactly. This is how exactly you are going to do it in the exam. If you were given post-adjusted trial balance, let's say you are not given the post-adjusted, then what do? Then you don't have to worry about this part. Yes, post-adjustment, no. And what do you do then? Having updated these things, you go straight away and record in the relevant reports. So you will do in the income statement, for example, rent expense or cost of sales. You record them as sales revenue. You record them in the income statement, and prepaid rent and unearned sales revenue. Those things you will record in the balance sheet. Right? Okay. Right. Then, guys, that is done. Probably we might not have anything else in inventory. We might have, but I don't think for other things we will come across these cost of sales and so on. If you want, we can do it now. Otherwise, we can do later as well. Right. Third bullet point. Inventory count. The business had an inventory balance of 44,500. That means what happens now? How much is inventory, guys? Now the inventory is 42 550. Yep. 42,550. Yep. Is how much we are having now. 42,550. They are saying it is 44,500. Gain of 1950. Yeah. Inventory gain of 1950. Yes. So we'll write inventory gain. What's the double entry, guys? So the inventory gain. Good. Inventory or debiting. 1950. Inventory gain. $19.50. Okay. Right. Shall we do the inventory gain straight away in the post adjusted? Debit or credit? Yeah, because it's a inventory gain is a asset. Yeah, others agree? Yep. Revenue? Okay, revenue or asset?
Revenue.
Sorry? Asset. Yes, Leah? Yes. Inventory gain is a revenue. Inventory is the asset. Yep. Inventory is the asset. Imagine the inventory loss, opposite. And what is it? Inventory loss. Expense. Yep. Inventory gain is a revenue. So which side? Credit. Inventory increases. Credit. Okay. Inventory, revenue increases. Credit. Right? Inventory gain, you credit. Right. Next one. Premises include land worth of 100,000 and buildings are depreciated at 5% per annum on cost. What do you mean by on cost? Have we done that? On cost? Yeah. What is on cost depreciation? Have you done it? No, we haven't done it. Yes. A mistake by me? No.
But it probably just means on the cost of the.
Yes. Meaning what method? Reducing or straight line? Yeah. Which one?
On our.
Reducing or straight line? Straight line. Yes. Per annum means what? Straight line. Similarly, there's another term for uh, reducing balance. That's called diminishing balance method. Or on the carrying value. If they give you on the carrying value or diminishing balance means what? Reducing balance method. Yeah. Those who do general maths, they know diminishing balance. Yeah. But others, yeah. Not that it is the reducing balance method. Right. Then guys, per annum on cost. Why did they give us? Why did they give you like land worth 100,000 and building depreciated 5%? So we'll go to the premises. How much? Premises is 120,000 guys. Yeah. So from that one, 100,000 is land. What is the use of giving separately? Yes, because land is not. Remember when we did depreciation, we said that land is not depreciated. Yes, usually. Rather, it is appreciated. Yes, but we don't do it here. We see in the uni, if you do accounting, you deal with that. We don't do appreciation, guys, but we do depreciation. So then, how much is the land? Sorry, building. 20,000. 20,000. So from this one, 20,000 is the land. So 20,000 times by how much? 5%, yes. Right? 5% is 1,000. But that's a problem. Is 1,000 the depreciation? No. Why?
The time runs.
Yes. So how long? So this one should be divided by.
Should be $500.
Should be 500. Why? Because this is per annum, guys. 1,000 is for 1 year. So divided by 2, 500. Yes. Make sense? Right. So what's the double entry for 500? Yeah, double entry for 500 depreciation. Yes, just remember the double entry for depreciation. No. Kishore?
Is it depreciation?
Kishore? No. Viraj? Leah? No. Yes, Lakshman?
Depreciation of the buildings,
Mhm.
debited.
Mhm. Accumulated credit, correct. Depreciation expense debit, accumulated depreciation for premises credit. Okay, take down. Um, 400 and accumulated. Yeah, then at the same time, guys, we'll go and update the depreciation expense in the post adjusted. Shall we do the accumulated at the same time or later? Hmm? When? Now or later? Okay, we'll do it later. Right. Then, guys, I'm going to add here how much? 500. Right? Why? Because we created it, so it is increasing.
So do we have to minus 500 from premises? Oh, no.
No, no.
Yeah.
We don't minus 500 from premises. No. Okay. Next one. Fourth bullet point. Mm, tell me the advertising expense.
Is it 480?
480. Right? Everyone read the question? Prepaid advertising was made 1st October for 5 months. That starts only from beginning of November and goes for back-to-back months. Okay. So then how much is the prepaid advertising, guys? 1700. You sure 480? No. 600?
80.
680? Okay. Any other answers? 480, 680? Yes. Any other 80s?
680.
680, you agree? 680? 680? Yes, Kishore. Yes, Viraj. Yes, Leah.
So you also have.
Yeah, how much is I'm asking how much the advertising expense is.
So far.
Yes, for this period. 680. Okay. So everyone agrees with 680? Yes, correct. Why is it that, guys? 1700 has been paid for how many months? No, 5 months. This is for 5 months. That means per month, 340. Yes. How many months have lapsed? Only 2. Even though they paid 1st October, the campaign starts from November. So that means the expense will be incurred for November and December only. Yes. 340 times by 2, 680. Good. Right? So these workings, guys, please do it in your paper or somewhere. I don't know, anywhere you want to do. Because later if you come back and check it, right, then you should be able to know how you got the figure. Okay? Right. So this one is 680. So then we have to subtract 680 from this one. Right? Minus 680. Right. Then, guys, what is the double entry? Double entry. Yes. Double entry. For 680. Prepaid.
Advertising.
Prepaid advertising is decreasing.
Yeah.
So asset, prepaid advertising is an asset. Asset decreases. Yes. Debit or credit? Credit, right? So prepaid advertising. Yeah. Where do you debit? So where do you debit? Yep.
Um,
Yeah. Advertising
make-
expense. Yep. You debit. Right. So we don't have an advertising expense account, guys. So that you have to go and form an advertising expense. Advertising expense. 680 debit. Okay. Next one. Term deposit. Yeah, this is what we did the last lesson is last week. Leah, I sent you the recording for last week's lesson. Maybe a couple of days ago. I emailed it. You didn't get it? Can you check now?
Wrong thing. For the depreciation expense, it's just 5% of 100,000.
Yes. No. Hold on. 5% on? No. For the depreciation? No. Not 500. 5% on 100,000. Why? Land is 100,000, which is not depreciated. We don't depreciate the land. Yeah. So we depreciate only man-made items, only the building, which is the remainder. 20.
Isn't 200?
For the term deposit,
Well, the interest first.
for the interest revenue, yes. Not there. Yeah. Interest is, yes, 200. Okay, calculate. What about the others? Yeah, everyone agrees with 200 or any other answers?
400, but that's wrong.
400
400.
per what?
Per year.
Per year, that's correct. 400 per year, correct. So, how much is the interest revenue for this period?
Zero. Because if I. Oh no,
You
just
don't get them because it paid March 31st, so it wouldn't, you wouldn't see it.
We wouldn't have received it, yes, by 31st December, yes, correct. So, what's the double entry? Yeah, firstly, accrued interest revenue, debit, credit, debit. Why do you debit accrued interest revenue?
It's an asset.
Asset increases. Why? Because, guys, have a look at this. Yeah, 200 is correct, Lakshman. So, term deposit was taken on the 1st of April, right? The interest is 5% per annum, interest being paid annually on 31st March every year. So then, now have a look at, guys. That means we have an accrued interest revenue. See, we have accrued interest revenue here. Yep, 100. How come it 100 is there? That's the interest revenue from 1st April to when? 30th June. Yeah, 100. So 8,000 is our term deposit times by 8,000 times by 5%. Yep, which is how much? 400. 400 days per year. 400 is per year, right? And then this one is actually 6 months, meaning only 200 we have earned, but that 100 they had earned is during the last quarter of the first half year, right? So from 1st April to 30th June, 3 months are there. So then for the 3 months they have earned 100, but they didn't receive it. That's why they are putting it in the accrued interest revenue. So then 200 we have earned. 200, what happens? We are going to debit accrued interest revenue because this is a current asset increasing 100, sorry, 200. And where do you credit, guys?
interest.
Interest revenue. Revenue increases credit. Yep. 200. Right. Okay, then we have both the ledger accounts in the pre-adjusted. So shall we update it? I'm going to add here 200 accrued interest, and we don't have an interest revenue account, guys, so we'll have to open it up. Interest revenue in the post adjusted. How much? 200. Sorry, credit. Yeah, be careful about the debit and credit side, okay? Right, 200.
Wait, what about the accrued?
Accrued we'll do later. So basically what I'm doing now is, for any ledger account that is not there in the pre-adjusted, I'm doing it here. And for the accounts, what we have in the pre-adjusted, we are updating it. So when we come back, we are going to fill the rest up in the post-adjusted. So then post-adjusted is done. Any other questions? Right. Third last, guys. Accrued commission revenue. Accrued commission had been received 3,000. I'm sorry. Commission had been received from the. Hold on. Yes, accrued commission revenue we had for 3,400, right? So 3,000 had been received, right, on the balance day. So then, the other thing I couldn't tell you, sorry. This one, you have to remember this one, okay, and understand this. If you come across anything in the additional information out of the trial balance, what does that mean? Oh, before that, if you've come across any item in the trial balance, what does that mean? Have they been recorded in the double entry system or double entry basis, or they haven't been recorded? Right? They haven't. So what we come across in the trial balance, yes, are they recorded in the double entry basis? Yes. That means are we going to run any double entry for these ones? Nope. Then, in contrast, if you come across something in the additional information, are they recorded in the double entry basis? Have they been recorded in the double entry? No, not yet. Correct, not yet. Unless otherwise stated. That is not recorded, guys, in the double entry. That means always we have to run the double entry for the additional information. Remember that. So you come across in the additional information means not recorded. Okay? So you have to make sure that you are doing the double entry. That's what we are doing. Yes, always the double entry. Okay? Right. Now accrued commission had been received on the balance day. Probably they haven't recorded. That's why they are telling us there was a double entry for that. Sorry? Debit, credit. Credited. Why?
Is you received money from them.
Money from them. So why do you credit it?
Oh.
Why do you credit the? You are creating accrued commission revenue, yes?
Yeah,
Why do you credit it?
like almost like an accounts payable kind of.
Accounts payable, yes.
Kind of like,
Yep.
so when you receive money from them, you're like, yeah, that the account goes down because it's not required anymore, or like the value's decreased.
Yep. Then what is the other one, guys? Any other thing?
Commission.
Yep. Commission revenue, credit, debit, 400.
And credit commission revenue.
Okay. Now 300 had been received, right? Then hold on. Now this one should have been actually, guys, not received. Sorry. Should have been, you know what? Yeah, it is. It should have been received. It should have been. Then what's the double entry? You are receiving money. So debit in the bank. And then where do you credit? Accrued commission revenue. Because your asset is decreasing, it's like you are receiving money from the account receivable. Right? December 31st. Bank debit 3,000. And accrued commission revenue you are crediting 3,000. Right? It's like we are receiving money from the accounts receivable. Yes, you debit the bank, credit the accounts receivable. Right. Then we have to update the bank. Where is bank? Cash at bank, you are adding 3,000. And then accrued commission, where is it? Yeah, here. Minus 3,000. Or maybe here. What? Okay, guys, next one. Sorry, before that, we have to, no, we don't have to update anything. Yeah, those ledger accounts are there, so don't worry. Right, next one. Insurance was incorrectly recorded in the electricity account. GST was recorded correctly. So what happens?
You have to do the opposite of what they've done, right?
Yes. So then, what's the then? This is a correcting entry, guys. What should we do?
Credit electricity.
Credit electricity,
Insurance.
debit insurance. Good. Okay. Right. Then shall we update the ledger accounts as well? Insurance, what happens? Yep.
Insurance decreases.
Decreases, issue.
Oh no, it increases because
Yeah. Plus 200. And then electricity, minus 200. Okay. Okay. Right. Last one in this page. Read that.
Wait, so could you go to post adjusted
Which one?
post adjusted?
Yep.
Also, do we not add the other one? The
Which one?
next to
Which one?
the insurance expense.
No, because they are already in the pre-registered. I didn't write it here.
Yeah.
Yep. Okay, guys. Read the last one in this page. I need your comments.
$760.
1060. For what?
Well, for the term one. The 3%.
3%. Before that, we had to do the writing office.
Yeah.
Yep.
Yeah, so right off.
Yeah. Then we did a print for the write-off. Yep.
And used to do it for. I don't know,
Allowance for doubtful debt. And then
Allowance for doubtful debt is how much?
176.
1760. Anything else? Any other answers? $1760? No,
no, so yeah,
not $1760. Doubtful debt debit or credit? Allowance for doubtful debt debit or credit? No. With the write-off? No.
about 60.
No.
Oh,
Sorry? No. Yes, dear. I'm getting doubtful debt for a sec. You will put it down. Okay. Yeah. So what's the double entry, guys? Then, or everyone has forgotten. Yep. Okay. So this is the story. Now, if you want, you can write somewhere the workings. Right. So this man, Bankirap, yes, owes 2200. From that, how much is he paying? 20%, 20 cents, yes. 20% is how much? 440. What happened to this 440? Sorry? No. How, what happens to these 20 cents? Yeah, we are receiving bank. Then how much is the remainder? 1760. That's why you said you debit the allowance for doubtful debt, yes? So, doubtful debt amount 1760. Is it correct? No. Why? Why not? You have to?
increase.
No. You have to get rid of the GST from this one.
Oh,
Okay, so get rid of the GST, guys. Our GST is 160. If you want, you can divide by 11 or whatever the method you know. 160. And that is GST. Yep. And then the other remainder 1600. That's the allowance for doubtful debt. Make sense or doesn't make sense? Make sure it is added up to how much? 2200. Yes, it should be added to 2200. Okay. Right. Shall we write the double entry? December 31st. Yes. Yeah. We debit the bank 440 allowance for doubtful debt. And you are creating where?
I have this receipt.
Accounts receivable. 2200. Write that man's name. Yeah. Whenever we are given the accounts receivable, payable names, we have to write them. Right. So it's done. Okay. Yeah. Right. Still not done with that. See this one. Bad debts. I'm going to rub this part, okay? Or maybe I'll leave it. Bad debts expense 500 represents for another account receivable shown who went bankrupt in September. So there is a bad debt expense of 500. Yes. Is it there? Yes. Hey, what are we going to do with this? Are we going to run the double entry for that as well? 500?
Included, no.
Yeah. Are we going to write the double entry for 500?
No,
Why not?
because it's already been done.
Already done. It has been given. I gave it to you to confuse you. Okay. Right? So it has been done, guys. You don't have to do anything for that. All right. Now, yeah.
On cat went bad in September.
Yeah.
How do we report for it before?
Come again, sorry.
If the cat went bad in September.
In September, because in September they came to know it. It was confirmed. Ran the double entry during September. Okay. Make sense? Yeah, that's a good question. September, yes, September it had happened. That means can there be accounts receivable written off during the period? Yes, anytime. But we give you specifically on that day. Why? To make it as a balance day adjustment, to get you to do it. Otherwise, anything can happen during the period. For example, let's say inventory loss, right? Let's say it was damaged, it was thrown to the bin. Still you can do the double entry. You don't have to wait for the last day. Yep. Inventory loss can happen anytime. Yep. So like that, you don't have to wait for the last day to do it. Okay. Right, guys. Next one. Still we are not done with that. See this one. Doubtful debt. The business's policy is what? 3% of accounts receivable. Right? Before this question, I think I haven't done, or maybe I can't remember. I haven't done setting up doubtful debts on the accounts receivable amount, but this one is on the accounts receivable. Usually, how did I give it to you? On net
So
credit sales. Yeah. So percentage was applied on net credit sales, but this one on accounts receivable. Okay. Right. Then. Okay, guys. Now you can ask me the other one. Why did we debit the allowance for doubtful debt? All the others make sense. Yes. Bank, GST. Allowance for doubtful debt, why did we debit?
in a way, like an
Yeah, usually allowance for doubtful debt, what is it? See, allowance for doubtful debt is a credit balance. So why are we debiting now then? Because why we are having the doubtful debt is we are not sure. We have doubts about some people. our accounts receivable, we have doubts. Okay. But when you debit, it means our allowance for doubtful debt decrease. So we don't have any more doubts about that. Why? Because it's confirmed gone bad debt. Okay. That's why. I have explained these things when we do doubtful debt, but no, you have forgotten. Hmm? Okay. Then guys, 3%. Now what is the approach I asked you to do for the doubtful debts, guys? I asked you to do the ledger account, yes? Yeah, do the ledger account. Don't do it here, but you can do somewhere, for working space, right? I'm doing it here, right? So you have allowance for doubtful debt, right? So the opening balance is, or whatever the balance is, how much? 200. Opening balance was 200, right? Having done that 500, we don't have to worry about that 500, okay? So this is 200. Then what's the entry that we did now?
Increased allowance.
Yes, we debited the doubtful debtors. How much? 1600. Saying accounts receivable. You don't have to write these things. This is because working. You can just quickly do it and see. You can put 200 on credit, 1600 debit, and so on. Then calculate 3% on the accounts receivable. Accounts receivable was, as I remember, 4,000. Yep, 4,000. From 4,000, calculate 3%, which is 120, yes? Yep, 120. What do we do with this 120 now? What do you mean by 120? What is this 120?
The safety.
We are saying, yes,
It's like a safety net. Oh,
your safety net. Yeah, you are saying that this is not what we are not what we are not sure. This is what we are not going to get in the future. This is what we are having doubts on our accounts receivable. Doubts about what? That we are not going to get paid. Right? We have $120 from accounts receivable. No, we are not sure about these people. Right? Then what do we do? That is what we are saying for the users. But we are saying that, look, we have 120, yes, people who would not pay. So then you are saying it's going to be the balance for the next period. January 1st, we are saying we are not sure about this 120. To have 120 on the credit side, we should have carried it forward from the debit side as the closing balance on December 31st. Okay, now it's a matter of balancing, guys. 1720, 1720, and then you get the difference 1520. What do you do with this 1520? Yeah, December 31st, what do you do? Yeah, so you are crediting here, debit to where? No, where do you debit? So you credit here and debit.
right. No.
Nobody remembers? Okay. Bad debts.
Oh,
Yeah. That shows like how hard you guys practice, yes? You don't practice the questions we did before? Hmm? You have to practice, okay? Don't expect your family members to do it. You have to practice, right? Yeah, you expect your parents to do, your siblings to do it for you. Hmm? You had to do it, okay? Right. Okay. So bad debts, we then we have a bad debt accounts, guys. So what do we do? We'll go there and report it. If you want allowance for doubtful debt, also we can update at the same time. 120. Okay, I'll update the 200 to 120. Right. And then this one will be 120. And then bad debts becomes, you are adding how much? 1520. Hmm. Then we have to do the double entry for the 1520. That's a different double entry. Bad debt expense. Right. Then guys, next one. Right. The first one in the next page. 400 votes remained. Unpaid on 31st December. That means what's the double entry for 400? Accrued. What's the double entry for the accrued? Sorry?
Accrued expense for electricity.
Yes, debit credit. Debit. Why? What is accrued electricity, guys? Asset liability.
Asset.
Revenue expense.
Asset.
Asset. Anything else?
It's unpaid, right? So it's,
Unpaid.
it's still
So if,
utilities and the expenses.
sorry?
Like utilities expenses.
Yes, expense, correct. Accrued electricity, what is it? No. Asset. Agree with him? Yep. Agree with him.
Sorry.
Accrued electricity, is it an asset? Electricity? No. What is it? Yes, Leah. What is it? Accrued electricity? Yeah, it's a liability. Yep. So liability is increasing, yes. In a way, electricity is increasing, expense increases 400, and on the other hand, accrued electricity increases, yes. Liability increases, credit. Okay. Right. Then Shall we update, guys? Accrued electricity account, we don't have it, so go to the post adjusted credit, and then electricity we have to update. Electricity we have to update in the pre-adjusted plus 400. Right? Then still we are not done. However, so we did up to here. Yep. However, this was paid on 6th January along with 600 electricity expense for January and both the above amounts plus GST. EFT 10. EFT 10 is, guys, part B, so we'll do it later. Before that, we'll do interest expense is payable annually in arrears on 30th April every year at 10% per annum. Okay. Right. Right. Interest expense is paid annually in arrears, right? Interest. So do we have a loan? Yes. Loan is how much? 6,000. So 10% on that is, yes, 600, right? Then how much is the interest expense? Guys, they are saying it is paid every year, 30th April, yes? Yeah, 30th April. That means, are we going to pay by 31st December? Yep. 31st December, are you going to pay it? No. That means it will be what? Accrued interest expense. Why? So, see, not 600 though. What is it? 600 divided by 12 times by 6. Otherwise, you divide by 2, which is 300. So, what do we do with the 300, guys? Yep, 300 will be accrued interest expense. Debit, credit? Debit. Why? Expense. Accrued interest. Okay, expense, interest expense, debit. Where do you credit? Interest debit, where do you credit? So 300, has it been paid? No, then what do you do? Yeah, so that is also accrued, yes. Now see, not only that, guys, there's another 100 sitting here. See, what is that? Accrued interest expense, 100. What is that 100? Huh? What is that 100? Why? Because remember, they always pay April 30th, means that 100 is for the previous period. Why? 600 times, 6,000 times by 10% times by 2 over 10. Why? 2 over 12. Why? Because for May and June, they haven't paid it. Why? They are paying April 30th every year. That means last paid is also April 30th. That means May and June for last period is accrued. That is what is sitting here, this 100. Yep. So next in now 100. That 100 is that. That means 50 per month. So then, yeah, that is that 100. For that 100, we are going to add how much? This 300 is. We'll add that 300 here. Plus 300. And then we don't have an interest expense, so we'll update it. December 31st. What's the double entry, guys? Interest, expense debit, 300, accrued, interest expense, credit, 300. And then let's open up the interest expense account. Interest expense, 300. Right. Make sure it's debit. Right. Next one. That's it, guys. That's the last one. Yes. But before that, remember that we have to do one more thing. What is it? Part B. What's the part B? This one. Prepare the general journal entry for EFT 10. This is the EFT 10. What happened in the EFT 10? That the electricity that was accrued, yes, was paid with 600 for January. That means altogether how much? 1000. So what's the double entry for that 400 and 600 as of January 6th? So this is going to be 1, 2, 3, 4. Up. January 6th, guys. I'll use a different one. January 6th. Right? So you are going to debit which accounts? Electricity expense before. Okay, electricity, all right, second. Electricity is debited. How much? How much is debited in electricity? Sorry?
600.
600. Very good. Why is it, Josh?
Because we already did that above. Like the 400 instead of 1,000.
Yes, 400 is the accrued.
Yeah.
600 is what? Electricity expense for January. So then that's the electricity expense incurred and paid in that period itself. That's why we are debiting electricity expense. 600. And also we are paying that 400 thing, which is this, yes? This 400 we are paying. What's the double entry for that? You debit the accrued electricity. Okay. Then what is the next one?
Debit 1,000.
No. This one has, what is it? See,
Oh, GST.
GST. So GST clearing, debit, credit, debit or credit, debit. Why?
Because you're paying.
Because we are paying. Our GST liability decreases. Liability decrease debit, and you credit the bank. 800. But this one, guys, don't update any ledger account. Why? Because it happens on the January 6th, next period. So you don't have to update this one for any year. So that's why I use a different color. Now we are done with the adjustments. Now what can I do? Let's start from the beginning. We started from the middle. Now we start from the beginning. Yes. Right. Okay. Now let's start, guys. Firstly, I will use a different color for this. Right. Insurance expense, how much? 20, 600. We are write the same term, same phrase that they have used. Right. Goes the next one. Term deposit. How much? 8,000. Right. Then prepaid rent, we have ticked it. That means had we done it? Yes. Prepaid rent. Then we have done. Right, next one, guys. Accrued interest, no, wages, yes. 13,400. And if you want, we can do accrued interest expense together, 400. Wages, 13,400. Accrued interest expense, 400. Okay. Next one, electricity. 2,700. Bad debts, 2020. Yep. Okay. Next one. Allowance for doubtful debt, guys, how much? No. 200 became 120, right? 120 and cost of sales 52 to 50. Okay. Next one. Sales revenue. 104, 500. And then sales 500. Yes. Right. Next one. Accrued commission revenue. How much? How much? Accrued commission revenue. 400. And profit on disposal is credit. Disposal of vehicle 500. Right? Accrued. Fine. Right. Next one, guys. Prepaid advertising. How much? So it should be 1700. Take away 680, yes, which is 1020. Yep. Accrued interest revenue 300. Prepaid advertising 1020. Accrued interest revenue how much was it? 400. For 300, yes. Right. Next one, guys. Cash at bank 41,500. Inventory 42,550. Hold on, no. I haven't updated one thing. This bank I haven't updated. 440. I have missed it. Also, I have missed the GST, guys. Accounts receivable. Hmm? That means bad debts is also going to change. Yep. Everything we had to change. So this one, guys, I haven't updated bank. Allowance for doubtful debt, we updated this. We did 1600. Yeah, we'll have to redo it. Bank, we'll start from bank. Bank is 440. At 440 here. Yeah, allowance for doubtful debt, we have to do it again. Yeah, well, if you have done before, guys, please cross that one. Yep. Transfer doubtful debt, our opening balance was how much? 200. Yeah, and then we credited 1600, which is the accounts receivable. Yep. And then we have to update the accounts receivable. How much was accounts receivable then? 4,000 should be subtracted by 2,200. Why? Because one man who owed 2,200 is gone bankrupt. So 1,800 now. Accounts receivable will be 1,800 only. Okay? So then from 1,800 we have to calculate 3%. 1,800 is our accounts receivable times by 3%, which is 54.
Yeah.
Yep. It's 54 only. Yep. Then what happens is we are going to update that balance. That's the closing balance. And opening balance is also 54. Yep. Then we get the total here. 1654, 1654. And then as a result, we are getting a difference of 46, 346, 1346. Yes. It's going to be the bad debts. Bad debt expense, okay? 1346. So bad debts expense change here, 1346. Right, then allowance for doubtful debt is done. GST clearing we had to debit 160. GST, where is GST? This one should be minus 160. Right? Right. Bank we updated. Yep, that's it. Oh no, bad debt expense we have to update as well. Bad debt expense, how much? Should be 1346, which becomes 1846. Yes. Bad debt expense. Yeah, allowance for doubtful debt also will be how much? 54, 56. Yes.
What was it?
54.
26 at the top. Was it?
The top what I fix is,
Oh no, as in like on the green part line. Was
yep, green one. I fixed the bad debt expense 1846 and allowance for doubtful debt 54. Okay. Yep. GST, I think I change. Yeah, minus 160. Okay. Then guys, yeah. Right. Next one, we were doing bank, yes. Yeah, bank will be how much? 41,940. Yep. 41,940 is the bank. I hope we don't have any other bank. Yep. No, we have to write the exact format, cash at bank. 41,940. Next one. Inventory 42,550, premises 120. Okay. Then accumulated depreciation 10,500, which is on the credit. Accounts receivable 1,800. Sorry, premises depreciated. We recorded that, yes. Yeah, 500. No, not 120,000. From the 20,000. 20,000 times by 10%. No, 5%, and half of that for 6 months. Yep. Accumulated depreciation was total 10,500. Yep. Okay. Next one. Accounts receivable 1,800. Accounts payable 7,900. $1,800 and 7,900 accounts payable. Okay. Right. Next one, guys. Loan 6,000. Capital 1,8600. Right. Then the last one is GST clearing, which is 1840. Yep. Yeah, now it's a matter of adding all of them. I think guys, there was a calculation mistake in the gain doubtful debt. Hold on. 1654. 1654. Doubtful debt question. Doubtful debt again. Wrong guys. The amount. This should be how much? 54. 1454. Opening balance is 200. Yep. Should be 1454. Right? 1454. Please change it. 1454. And then Yeah. Then in the bad debt expense, we had to add 1454, 1954. The balance in the post adjusted. This one. Yeah, now it should be correct. Yeah, please change these two. This one actually, bad debt expense only. And the double entry in the balance stage adjustment. Right. Okay, shall we start the income statement and balance sheet? Yeah.
The inventory.
Inventory, this part. Okay. All right, guys. Then we'll do the theory questions later. We'll do the income statement and balance sheet. Right. We'll start from the beginning, guys. We have to do balance sheet only the assets section. Right. So we don't have to worry about the other ones. Okay. We'll start with the prepaid rent. 15,000. What is it? Prepaid rent.
Absolutely.
Current asset is. Before we write prepaid rent, remember we had cash at bank. We'll start with cash at bank. Just write it. We'll put them on later. Right. And then you can write prepaid rent. $15,000. Right. And then next one, rent expense. What is it? It's an other expense. So maybe start somewhere here. And expense 8,000. Right. Next one is inventory gain 1950. Right. Inventory gain.
Oh, but then it's like wouldn't he go one line over or something?
Yes. Yes. So that's you have to have kind of an idea what items you have. Yeah, you are correct. So basically, However, you are doing it in pencil, so you can rub in case. But remember, we had some other revenues. So then I would start probably somewhere here. Plus
Even if you leave like extra money
inventory.
from start, like if you have less the revenues than you expect, or if you have more revenues than you expect,
Yep.
you might go over, or there might be a lot of entry runs. Like
Yes. So one thing is, then if you want, we can start from actually the probably from the revenues also we can start. Otherwise, we can do the format quickly, right? If you have such a problem, we'll start from here. Sales, right? And then remember we had sales returns, yes? No. Yeah, we didn't have sales returns, yes? No, we didn't have sales returns. Then minus cost of goods sold. I can say less. Then you have cost of sales. Right. Did we have other direct expenses? Cartage in, freight in? No. Right? So then probably cost of sales, and then we'll start somewhere here. We'll do the gross profit. And then for that you are adding add inventory gain, which is how much was inventory gain? 1950, yes. Right. Then next one. Depreciation expense of premises, 500. Advertising expense 680. Interest revenue 200. It is coming under other revenues. Interest revenue was 200. Right. Then guys, next one. Accrued electricity is a liability, current liability. We don't do it because we are doing only the assets section in the balance sheet. Interest expense, another expense 300. 300. And next one is insurance expense 2600. Term deposit 8000, which is a non-current asset. Then wages and expense 13400. Accrued interest expense, we don't have to worry about it. Current liability. Electricity 2700. Then bad debts 1954. Allowance for doubtful debt, as we have recorded. It's coming under the current assets. Yeah, we had recorded, guys, with the accounts receivable, but how we will do it now? 54. Accounts receivable firstly. Receivable, shall we write this 15,000 the other side? Accounts receivable and less allowance for doubtful debt. $54. Don't put brackets. Next one, cost of sales 52,250 in the income statement. 52,250. Then sales revenue 104,500. Sales 104,500. Right. Next one, unearned sales is a current liability, so you don't have to worry. Accrued commission revenue, yes, current asset. $400, yes. Accrued commission revenue 400. Profit on disposal of vehicle. Yep, which is other revenue. Profit on disposal of vehicle 500. Next one, unearned sales, current liability. We don't have to worry. Accrued commission revenue, current asset. Yes, we have right. Oh, sorry, we didn't done them. Yes, sorry. Prepaid advertising 1,020. Current asset. Prepaid advertising 1,020. And then we have accrued interest revenue. Accrued interest revenue is 300. Another current asset. Accrued. Hold on. Accrued interest revenue 300. I need one more space, so I'm going to rub this one. All right, non-current assets downwards. Term deposit is 8,000. Okay. Right, next one, guys. Cash at bank 41,940. Current asset 41,940. Next one, inventory 42,550. Inventory 42. $42,550. Then premises 120,000, which is premises 120,000. From that one, take away accumulated depreciation of premises. How much? 10,500. 10,500. Yep. And then which is the net amount is 109,500. Right. Next one, guys. Accounts receivable 1800. Accounts receivable 1800. 1800 here. And then from that we have to take away 54, which is 1746. Right? Okay. Technically, guys, that's it. The rest is actually accounts payable, loan. There are liabilities, don't worry. Capital, GST clearing. Yeah. They also we are not going to record. That's it. Then it's a matter of calculating the profit. Shall we calculate? So just at gross profit, sorry, gross profit is firstly again 52,250 because 50% markup. And then inventory gain we are adding and we arrive at adjusted gross profit, which is 2 and then other revenues 700, which is 54,900 in new study design. There is no term for 54,900, but in the uni you have. We call this one operating profit, but don't write now. Then guys, we have to take away all the other expenses, which is, let's add them. 4, 3,
Mm.
30,134. Then net profit 66. Twenty-four 766.
Let's go.
Right. Okay, guys. Then we are done up to part G, and then we have to do part D and E. Explain what is meant by adopting the asset approach to prepaid expenses. 2 marks. Right? Asset approach to prepaid expenses. Yeah, prepaid expenses, what is it? Prepaid expense is an asset, yes, which is what we call as using the asset approach. Why do we say it is asset approach? Because, yes, very good. Prepaid expense. Let's write it. It is treated as a current asset because it is a present economic resource controlled by the entity as a result of past events that would potentially provide future economic benefits during the next 12 months when premises will be used in the future.
So we're after that would and then for provide future economic
Potentially.
potential.
Yeah. Not clear. Potentially. Right. Next one is, guys, part E, which is owner is very happy as they adjusted trial balance balances. John believes that this means the double entry recording is correct. Which up to which extent you agree? Discuss. 3. Yeah. Do you agree with the owner?
No.
Yeah. Usually we shouldn't agree with the owner. Right? Okay. Why? Yeah, it's a discussion. However, yeah. Why?
It could
So
make mistakes anyway.
yes. Why? Any other contributions? Right. Basically, guys, yeah, he's partially correct. Why? Our trial balance balances means, what is it? Our total debits are equal to total credit. That means for every debit entry, we have a credit entry. So that means in that sense, arithmetically, numerically, we are correct. However, still there can be errors on top of that. What are those errors we call? The errors that are not revealed by the trial balance. Like what? Errors of omissions, yeah. Errors of commissions. Commission means not the commission revenue. That means we are recorded in the wrong ledger account. Let's say we have swapped the debit and credit entries. Yes, right. Or wrong amount has been recorded in both both ledger accounts. Yes, like that. We can have entry. So we'll write the answer for this. Hello. Yeah, very good yourself. Yep. Okay. Okay. Yeah, I will. Yeah, I'll send. Uh, yes. Can you text me? Yeah. Yeah. I'll send. I'll forward the Zoom details. No worries. Bye. No, sorry. Bye. Okay, guys. Right. Basically, that's it. Any questions? Yeah. How do you find that question? Huh? Hard.
Yeah.
Yes. Yeah. Yes. Very good. Very good. So you know what you have to do? It's basically what you don't do. Yeah, you have to go and practice. That's the thing. Otherwise, you won't get it, guys. Right? However, yes, that's hard, I know, because and also it is long. Yes. Yeah. So because I wanted to include all the entries, like nothing has been left out. So everything I have included in doubtful debt, inventory loss. Only thing I didn't include is write down. Right. So, however, you should be fine. Same thing. So technically everything is there, and then homework is question 1. So please do it. I'm checking it. Okay. Yeah. If you don't do it, and then you'll have to do it after the class. Okay. Okay. Sure. Balance sheet. Yes. Okay. Balance sheet and income statement both. All right. Can you see? All right.
So I'll be back with them.
All right, sure. Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
See you next week.
See you. Bye. Thank you very much.
Listen.
All right.
Thank you.
Thank you. That is it.
So next week, I think I might need a few practice sets.
Yeah, sure. Yeah, anyway, next week we are doing a practice set. I already had it today as well. Yeah, but we are doing tomorrow, I mean, next week, evening.
So what chances are doing for the practice set?
Practice sec, you are doing income statement and cash flow statement, yeah? Yeah, those are those, yeah. Sunday, you can sit too.
We can try.
Oh, okay. Probably there is, thank you. There is a plug point over there also if you want.
Thank you.
Also again this week.
Okay, should I give you
Yes.
a list?
Thank you.
Did you mention the practice sets from the school for what you're going to do?
For this next.
Yeah, for the
Yeah.
yeah. Can you please send it?
Yeah.
Yeah, how I guess. Yep. Two of you, I mean, one of your colleagues will join online. The other one is not coming today. So last time, guys, we were doing inventory, yes. Yep. We were writing some notes, yes. Yeah, we'll continue to write. This one's